Welcome to the Deep Dive. We're the show that, tries to cut through the noise and get you really well informed on the stuff bubbling up in the digital world. Today, we're jumping headfirst into, the pretty exciting but sometimes kind of bewildering world of new cryptocurrencies, and specifically the promise of groundbreaking tech in blockchain gaming. It's a space where things change fast, right? From pure hype to real uncertainty almost overnight. Our focus today, it's B3. It's described as a horizontally scaled gaming ecosystem built on the Base network, and it's got these big ambitions to, shake up on-chain gaming. So we're going to unpack B3 using a whole stack of sources. We've got detailed price predictions from CoinCodex, project details from Root Data, a really critical look from Chaincatcher, and an overview from Binance Square 2. Our mission here is basically to pull out the most important bits of info, understand the tech, the money behind it, the market vibe, the goal, just to give you a solid, well-rounded picture of this pretty intriguing digital asset. Okay, let's get into it. What exactly is B3 and why is it making waves?
Right. So B3 is positioning itself as a layer 3 blockchain. It's built specifically on the Base network, and its main focus, really its only focus, is supporting these fully on-chain gaming applications. The developers are claiming some, pretty impressive technical advantages. They're aiming for transaction costs like as low as 0.001 per transaction. Super cheap.
Wow.
And a theoretical peak throughput of over 9,000 transactions per second. So fast too.
Well, on paper, those specs, super fast, super cheap. That sounds like the dream for gaming, right? No lag, low cost. But is it really that simple? Are there hidden catches?
Exactly. On paper, it sounds great. But here's the thing you really need to grasp. B3's whole technical foundation, it relies completely on the Base chain. And Base, in turn, is supported by Ethereum's security. So that immediately brings up a big question for you, whether you're a gamer or an investor. What happens to B3's speed and low cost if Ethereum, the foundation gets congested? We saw that happen during the NFT crazes, right?
Oh yeah, gas fees went through the roof.
Exactly. So those delays, those soaring fees on Ethereum, they could definitely ripple up and hit B3's performance, no matter how fast it claims to be theoretically. One source had this great analogy, calling B3 a third landlord. Ethereum's the first, Base is the second, and B3 is just like converting the basement into a capsule hotel. It gets the benefits, sure, but it also inherits all the potential problems from the layers below it.
That's a really helpful way to think about it. So are they kind of stuck with the landlord's issues, or can they insulate themselves somehow? And speaking of the market, let's get a quick snapshot. Where does B3 stand right now?
Our sources say as of June 19th, 2025, the price is around 0.02958. And it's seen about a negative 10.73% change in the last 24 hours. The trading volume is around $8.99 million, but that's down quite a bit recently, like negative 36%.
Yeah, and just to give you a sense of its size in the market, its circulating market cap is roughly $80.86 million. That puts it around rank hashtag 402. Its fully diluted valuation, the FDV, is higher, around $296 million. And there's a max supply of 100 billion B3 tokens. 100 billion, okay.
With about 27.27 billion of those actually circulating right now. It hit an all-time high back in February 2025 of 0.01828.
Right.
Its all-time low was more recent, just June 5th, 2025, at 0.002727. So quite a bit of volatility there.
Definitely. And it only launched this February, but it managed to pull in $21 million in seed funding way back in July 2024, even before going public. But, to really get B3, we need to look deeper than just these numbers. We need to get into what one source called its triple persona, which is basically the team, the tech, and the tokenomics, how the whole economic side is set up.
Let's circle back to the tech first, but maybe with a more critical eye this time. It's pitched as this layer 3 gaming-specific chain, offering private room services for developers with those super low gas fees and high TPS. Right. But again, connecting that to the bigger picture. While those numbers look good on a slide deck, the reality is its performance is fundamentally tied to Base and Ethereum. If the landlord Ethereum has problems like congestion, then the capsule hotel B3 is probably going to feel it too. Doesn't matter how fast its own engine can theoretically run. That's just a really important thing for you to keep in mind if you're counting on that smooth, cheap, on-chain gaming experience they promise.
Makes sense. Okay, let's shift to the capital persona then, because the team's background, how they got funded, that tells you a lot, right?
Right.
The team, they often highlight this. Co-founder CEO Daryl Zhu, former Coinbase business development. Co-founder Sean Geng, former Coinbase engineer. Victoria Hying is also a co-founder. Plus that big $21 million seed round. Pantera, Hashed, Marana Ventures, even the Base ecosystem fund, which is tied to Coinbase. Now, Chaincatcher calls this, pretty provocatively, the re-employment plan of former Coinbase stars. Why would they say that? What's that suggesting?
Yeah, that's a really sharp point they make. Look, having that kind of pedigree coming from a big player like Coinbase, it definitely gets investors excited. It brings in cash, creates buzz, no doubt.
Sure.
But Chaincatcher's angle, the critical view is this. A huge chunk of the tokens, 43.3% of the total supply, is allocated directly to the team and the early investors.
Almost half.
Exactly. So the concern is, maybe the setup is, and I'm quoting here, more like a guide for former big company employees to cash out than, pure driven entrepreneurship. The key thing for you to think about is, yes, a strong team is good. But if insiders hold that much supply, it does raise questions. Are they in it for the long haul, or is there a big incentive to sell off early, especially if the price pops when those tokens unlock?
Okay. That definitely adds a layer of complexity.
Mm-hmm.
So let's talk about the investor persona then. How does B3 actually interact with players, with token holders? They use this thing called airdrop economics. Started with a big drop, 9.9 billion tokens. But apparently the rules for earning points by playing games were complex as a college entrance exam math problem. That's quite the description.
Yeah. Doesn't sound very user-friendly.
And they're promising more stuff like tournaments and gamified mining. So what does this all actually mean for, the average person involved?
Well, this is where some of the sources get really critical. One viewpoint is that these airdrops, they might just be using token subsidies to exchange for user data.
Meaning
They're essentially selling you, the user, as a data point to game developers. You play, generate data, they monetize that data.
Okay, so the free airdrop isn't exactly free.
Potentially not, in that view. And then there's the staking. They offer this really tempting 35% annualized return. Sounds amazing, right?
Yeah, 35% is huge.
But the concern raised is, what if the token price drops? If B3's price falls by 35%, which is definitely possible in crypto, that high yield doesn't matter much because your initial investment, your principal, could effectively be cut in half. One source literally calls it playing Russian roulette with your money. Another suggests it smells like a typical Ponzi structure, using new investors' money to pay returns to earlier ones.
Oof. Okay, so definitely some red flags around how users are brought in and incentivized, given all that. Let's look at the price predictions. What's the crystal ball saying? According to CoinCodex, as of June 19th, the overall sentiment for B3 is actually bearish. They've got 17 technical indicators flashing sell, only 2 saying buy. The fear and greed index is at 52, which is kind of neutral, right? That blends volatility, volume, social media buzz.
Yeah, neutral, but leaning bearish based on those indicators. And for the short term, CoinCodex is generally painting a pretty downbeat picture. They're predicting a significant drop, over 25% by mid-July. Even looking just days ahead, yeah, maybe a tiny bump tomorrow, but the forecast after that shows mostly declines.
So, not looking great short term.
Not really. For the rest of 2025, it's a mixed bag. Some months show potential gains if you were to buy, but the overall ROI projected for the whole year is, well, pretty minimal, like 1%. It highlights a lot of volatility, probably more risk than reward in the near term. Based on their technicals, CoinCodex flat out says it's currently a bad time to buy B3.
Oh, okay.
They even suggest short selling might be the play right now, pointing to a potential profit of over 30% if you shorted $1,000 today and bought back by October.
Interesting. Okay, but what about zooming out? Let's look longer term, out to 2030. What do the CoinCodex predictions say there? The summary seemed more bullish, suggesting B3 could see some decent gains over the next few years.
That's right. The longer-term outlook does appear generally more optimistic, yeah? For 2026, for instance, they forecast it could trade way up, potentially hitting a price representing a 178% increase from today by April.
178%. Okay, that's significant.
And that kind of uptrend seems to continue in their models. For 2029, they project it could reach a high that's like a 333% gain from where we are now. So substantial growth predicted over the years.
Right, but there's always a but, isn't
Well,
it?
yeah, it's crucial context. While those long-term predictions are bullish, showing growth, those same CoinCodex sources also state pretty clearly that B3 is not expected to hit those big milestone numbers people dream about in crypto, like $0, 10 cents, or $1, or $10.
Oh, okay, so manage expectations.
Exactly. Their highest estimated price, looking way out to 2050, is only 0.089693. So yes, growth is projected, but it seems to have a much lower ceiling compared to maybe some other tokens people get hyped about. It helps ground those big percentage gains.
Got it. Good context. Okay, let's peel back another layer now and talk about the risks, the traps, the stuff beyond the hype. Chaincatcher, for example, talks about valuation metaphysics. What are they getting at there?
Right, valuation metaphysics. It basically refers to this deep skepticism around B3's big claim of having 6 million daily active users, or DAUs.
Yeah, 6 million sounds huge.
It does. And if you use traditional valuation models, like how Axie Infinity was valued at maybe $10,000 per user, 6 million users could imply a massive market cap, like $60 billion.
Whoa.
But, and this is the critical part from Chaincatcher, they claim 90% of those users are just zombie accounts. People only there to farm the airdrop, not actual players. That means maybe fewer than 600,000 real players. And the big concern for you as an investor is that these airdrop hunters will just immediately withdraw and run once they get their tokens.
So if 90% aren't real, engaged users, that completely changes the picture of B3's user base, doesn't it?
Absolutely. It suggests the marketing claims might be way off from the actual engagement. It means the perceived success could be built on, well, a pretty shaky foundation. And adding to that skepticism, these critical sources point out there's a real lack of traditional ways for B3 to actually make money based on their white paper. Well, think about it. In-game transaction fees. Most of the games are free, so not much revenue there. Staking rewards. We already heard the accusations of it being a Ponzi structure. Advertising revenue. Deemed probably not enough to sustain things. Yeah. So if the games are free, staking is questionable, ads are insufficient, it really makes you ask, where's the long-term value actually supposed to come from for you, the investor? Chaincatcher puts it really bluntly. They suggest B3's real valuation model is basically team background times airdrop popularity times investor FOMO divided by regulatory risk.
Ouch. That's a cynical take. What about the on-chain data? Does that back any of this up? What does it tell us about who's actually holding the tokens?
Yeah, the on-chain data also raises some eyebrows. The top 10 wallet addresses, not counting the big exchanges, control a massive 72% of the B3 tokens.
72% in just 10 wallets.
Yep. Chaincatcher calls this speculator control. It means the price could swing wildly based pretty much on the big players' moods, not necessarily fundamentals. Plus, they point to other signals, like a net inflow of tokens to exchanges, which often means big holders are getting ready to sell. And negative contract funding rates, meaning traders are paying extra to bet against the price going up. These are seen as signs that speculators are actively squeezing the market. For you, it means standard technical analysis might not work as well. The game might be more about what the whales are doing.
Okay, so a market potentially dominated by a few big players. And then there's this other risk. One source called it the sword of Damocles. Token unlocking. That sounds serious.
It really is. This is a major risk hanging over the project. Remember how the team and investors got 43.3% of the tokens? Well, 25% of the total supply held by them is locked for the first year, but then it starts unlocking gradually over the next 48 months.
So a slow release of a lot of tokens?
A lot of tokens. And here's the danger. Even if the price tanks, say it drops from $0.001, those early insiders, whose cost might have been practically zero, like less than 0.001 cent, they could still make huge profits selling their unlocked tokens.
While everyone else.
While retail investors, people who bought on the open market at higher prices, could get absolutely crushed. They risk being buried at the top of the mountain as all this new supply hits the market. It's a significant future selling pressure to be aware of.
Yikes. Okay, that's a big one. And if that wasn't enough, there's the SEC sniper rifle, as Chaincatcher calls it, the regulatory threat. Why B3 specifically?
Well, given the team's U.S. backgrounds, especially the Coinbase connection, and the fact that B3 runs on Base, which is Coinbase's chain, it makes it a pretty plausible target for the SEC to look at and potentially classify B3 tokens as unregistered securities.
And if that happens?
The consequences could be brutal. Think collective delisting for major exchanges. We saw that with XRP, right? Its price basically got cut in half almost instantly when that happened.
Yeah, I remember that.
Plus, potentially massive lawsuits and fines for the team itself. So this regulatory risk, it's like a potential nuclear bomb hanging over the whole project. For you, it means even if everything else looks okay, this could come out of nowhere and just wreck the value.
Man, okay. Lots of risks. And finally, let's touch on the actual games, the ecological bubble. The claim is 80 launched games, but Chaincatcher calls them 80 landmines. What's the issue there?
Right. 80 games sounds great for an ecosystem, doesn't it? But Chaincatcher paints a, well, far less rosy picture. They claim something like 70% of these games are just simple, reskinned mini games, like putting a new look on Tetris but running it on chain. Not exactly groundbreaking.
Okay.
Then maybe 20% are just trying to ride the AI hype, maybe using AI buzzwords but without much real substance. And the last 10%, still under development apparently with screenshots, all from PS, meaning Photoshop. They might not even be real gameplay images yet.
So mostly clones or concepts, not real.
Yeah.
Engaging games.
That's the critique. They use this analogy of a food street. Looks dazzling with all the signs and lights. But when you look closer, there aren't many substantial, unique, or high-quality meals being served. For you, this suggests the vibrant ecosystem might be more about quantity over actual quality, which could definitely hurt long-term player interest and the real demand for the B3 token.
Okay, wow. So putting this all together, the tech potential, the team background, the funding, the hype, but also these significant risks and critiques. What does it mean for you listening? How might someone approach this? Our sources kind of sketched out a few different investor types or strategies.
Yeah, they did. First, you've got the short-term gamblers, maybe someone who sees the volatility and wants to play it. Their strategy might be, okay, take a small position, maybe no more than 5% of their portfolio, set a really strict stop loss, and basically bet on those speculators, the whales we talked about, pushing the price up for a quick flip.
And the risk there?
The big risk is becoming fuel for a pump and dump. You get caught on the wrong side, maybe buy near the top and end up buried at the top of the mountain when it crashes. High risk, high potential reward, but very speculative.
Okay. Then there are the long-term believers. What's their angle?
These are the folks who might buy into the vision, the idea that B3 could become the Steam of blockchain games. Their strategy might be to dollar cost average, maybe invest a bit each month, ignore the short-term price swings, and just hold on, betting on that long-term ecosystem growth.
Sounds patient, but what's the catch?
The huge risk for them is that token unlocking we discussed. There's a very real possibility, according to these sources, of a major price crash when all those insider tokens start hitting the market. They could potentially face a 90% reduction in principal. I mean, that's basically wiping out almost your entire investment, even if you believed in the project long term. A devastating risk.
90%. Wow. Okay. And the third type?
The third profile is the rational investor, maybe someone more cautious. Their strategy might be just to watch from the sidelines for now. Wait and see. Specifically, wait until that big token unlocking period has passed, or at least is well underway, before even thinking about buying in.
What's the risk for them?
The main risk is opportunity cost, right? They might miss out if there are some big short-term price surges before the unlocks really bite, but their main goal is protecting their capital, avoiding those major downside risks we talked about, prioritizing safety over chasing quick gains.
Makes sense. So 3 very different approaches, and regardless of which path someone might lean towards, it seems pretty clear, doesn't it? B3's success really hinges on a few key things. Like, will that on-chain gaming ecosystem actually grow with real users and good games? What's the overall crypto market doing? And what happens with Base in the wider gaming world?
Absolutely. This whole deep dive into B3 really shows it's like a perfect case study of how crypto works, doesn't it? This complex mix of, technological vision, big money moves, and let's be honest, human greed. Its price swings kind of reflect the laws of this weird market. Before consensus is formed, all value is a bubble. After consensus collapses, all bubbles are tears. That quote really stuck with me.
Yeah, that's powerful. And as always, we have to say, all this information we've discussed, it's just for general understanding. It's definitely not financial advice or investment advice or any other kind of advice. Please always talk to an independent professional consultant before you make any investment decisions. Seriously. So wrapping this up, knowing all this now, the potential and the pitfalls, it makes you think, right? For this warning, what are your ultimate survival rules in this crypto world? How do you weigh these ambitious claims against the very real risks we've uncovered? And maybe more importantly, what specific signals will you look for in the next wave of projects to tell the difference between real innovation and just, speculative frenzy? Keep digging, keep learning. That's really the only way to stay informed.